Welcome, and thank you for tuning in to ESG Talks, a KBRA podcast series focusing on environmental, social, and governance, ESG. This podcast series highlights various ESG hot topics and includes commentary from prominent voices within the ESG community. In this episode of ESG Talks, Luigi Griffo, Senior Director of KBRA's European Investor Relations team, interviews Sabrina Fox, CEO of the European Leveraged Finance Association, ELFA. ELFA is a buy-side-only trade association that acts as a voice for the investor community and seeks to create a more transparent, efficient, and resilient leveraged finance market. Sabrina is a recognized expert in European leveraged finance and is focused on improving disclosure standards and educating market participants on the importance of lender protections in documentation.
Sabrina, thanks for joining us today. ELFA is a well-established and recognized organization in the leveraged finance market. But for those listeners that aren't familiar with it yet, it'd be great if you can speak a little bit to what's ELFA's mission and why the work it does is so important for the leveraged finance market.
Absolutely. And first of all, thank you so much for having me. I'm really looking forward to the conversation. So ELFA was founded in January 2019 to act as the voice of the lender community in Europe. And when we started, we worked on behalf of high yield investors and then very quickly became a platform for loan investors and then private debt lenders and CLO managers and investors as well. So over time, our mission, which is to increase transparency, improve disclosure, facilitate engagement, and in general, be advocates for the buy side, it has shifted as the needs of the asset classes that we represent shift. For example, we're very focused on ESG and have been since our inception, and I know we're going to talk a lot more about that. But as the needs of the market change and issues arise that lenders feel they would want help to make the market more aware of, or want to take a closer look at, or publish best practice guidance on, that is what we are here to do. So we work on issues like transfer restrictions. We engage with market participants to raise awareness on covenant provisions and protections. We do a lot of educational events and provide resources for our members, including through our partners like KBRA. It's been almost 5 years now, and I think over that time, the core mission remains the same, but how we put that to work and deploy it into the market for the benefit of our members shifts as the needs of the market shift.
Yeah, thanks for that overview, which I think the listeners will find useful. And as you said, it's kind of a multifaceted organization with one main objective, I guess, is the better functioning of the overall leveraged finance market and private credit space. You mentioned ESG, which obviously is an important part of what you guys do. KBRA and ELFA co-hosted an event a few weeks back, obviously on ESG, on private credit. And I think now more than ever is clear how ESG is top of mind for investors in their investment considerations. I was wondering if you could give a little bit of an overview on the state of play for ESG in the leveraged finance market and what you think the current challenges and opportunities are or that you see.
Absolutely. When we started out to tackle ESG as one of the, as you say, top issues on the list of our members, it really was a question of efficiency. And it wasn't just efficiency to benefit our members, but to benefit market participants more broadly. At the time, sort of mid-2019, ESG was important, but there was no single, kind of approach to ESG disclosure and data. So borrowers were faced with the prospect of completing many different ESG questionnaires that was causing issues with deal execution. And we thought that there was some value that we could add there. So the first thing we did was bring everyone together. We worked with Principles for Responsible Investment, and we started a series of workshops to bring together borrowers, lenders, and advisors to look at ESG data from a sector level perspective. And we've since had now I think like 8 or 9 of those workshops, and we've published ESG fact sheets, the resource that put everyone on the same proverbial page and literal page on ESG data. And now we have 15 sectors covered by that. And we're looking for new sectors to cover all the time. And I think one of the most important aspects of that is that we did speak to borrowers. We wanted to ensure that what was being asked for was what could be delivered and that we could find a more or less a meeting of the minds on that. I think ESG has gone from the publicly listed to public securities to the private markets and now smaller issuers. The issue really becomes borrower resource and education. And as I mentioned before, we pivot where we're most needed. So we have tried to publish to the market resources for borrowers that will support them on their own personal ESG journeys and kind of bring them up to speed and things that our members can send to the borrowers that they're working with to help to support them. There also has been a lot more focus on carbon and climate. So as ESG evolves as a topic, there's kind of like a deeper dive on specific issues. And carbon is an interesting one because, again, getting everyone on the same page about how to report it was something that was really a high priority for our members. And so we recently published a report specifically for CLO funds, but it can be applied to any fund to help bring carbon reporting, so the very granular reporting, onto the same page as well.
Yeah, and you mentioned like ESG fact sheets, which we know are becoming more and more like go-to for investors in the space to address that complexity around data collection and completeness and so on and so forth. Would you be able to speak a little bit more about those and maybe just on the acceptance by the market and like how much of the market those fact sheets are aiming or cover at the moment, but also if that could be applied across liquid and illiquid markets, if you have different initiatives based on the asset class?
Absolutely. So when it comes to the data itself and the topics that are being requested, the ESG fact sheets can be used in any market. The real differentiating factor is going to be sector. And that's why we decided to do as many sector fact sheets as we had requests for them. How they're deployed in each individual market is unique. Obviously, I know we've had really good take up and great feedback from private equity sponsors and arranging banks on the ESG fact sheets in the broadly syndicated loan market. It's really unblocked some bottlenecks, which allows people to spend time doing what they do best. In the private debt market, it can also be really useful, not only for disclosure, but also for engagement. So it allows private debt lenders to present something to their borrower contacts to say, look, if you need to know where to start, here's a good place to get going. And each of the ESG fact sheets starts off with effectively the same question, which is, what does ESG mean for your particular business? Because it's a recognition that even in one sector, two different businesses might do ESG slightly differently. And then in the public securities market, there are different challenges. So we're working with advisors, law firms, and others to increase adoption of the ESG fact sheets in that market. And there are just other issues at play with, regulation and whatnot in adopting those. Whereas in the loan market, it's regularly completed, uploaded to the data, the data room, and everyone's sort of off to the races. There's definitely an adaptability in the resource. They can be used for any asset class. The deployment will depend on the sort of nature of the market itself.
Thanks for that, Sabrina. I think like in the time of the existence of ELFA, you probably agree we've come a long way when it comes to ESG disclosure, data collection, and integration into investment decisions. And obviously initiatives like the ELFA fact sheet has certainly been instrumental in driving that change. If we have to take a step back and a step forward, we were curious to understand throughout your time at ELFA, what have been some of the highlights for you and then some of the key initiatives for the next 12 months?
I think in terms of highlights, in general, it's been great to see ELFA, as you say, become a recognized, credible counterparty in the market. And on ESG, I think we've proved our value and the utility of having lenders speak with one voice that could really help to improve efficiency, and efficient markets are stronger, bigger, faster growing markets. That's been really, really great. And obviously the ESG project itself has been a real lesson in learning, you can plan so much, but you don't want to put a rigid plan in place on something which is evolving so quickly. So when we unlocked the ESG data, it was so interesting to sort of sit back and see the effect of that. And it ended up resulting in a proliferation of ESG linked financings in the loan market and sustainability linked high yield bonds. And because, we're able to move quite quickly to respond to those new trends, we were able to create best practice guidance for those instruments, because at the end of the day, adhering to high standards is what keeps the market strong and growing. No one wants to, run the risk of greenwashing and a loss of reputation of the asset class in that area. So that was really just reassuring to know that, you don't have to plan everything out. With something like ESG, and now we're looking at the same thing with AI, it's, the most important thing is do what you can right now. And for us, that was creating the committee and getting started talking to people, and then planning loosely around what happens next, I think was really important. And we're actually, in terms of what's coming in the next 12 months and slightly away from ESG, we are looking to look at AI more closely and digitalization as well. And again, the template is the same. You pull together people, talk to them about what they're seeing, and then decide what is best in terms of next steps without creating a plan that's so rigid that you can't respond to changes as they arise.
Sabrina, you have an upcoming annual conference on the 14th of November with the aim, obviously, of bringing together ELFA members and partners to discuss key market issues and trends, and I guess AI and digitalization. So just to discuss market trends in terms of the conference, what are you expecting from it and what you are most looking forward to?
I mean, I am so excited about the conference. This is our second annual conference. We're co-hosting again with Bloomberg, and the agenda is all of the top issues and across the asset classes that we operate in. And what we are seeing in the market is that it is increasingly functioning in an interrelated way. So all of these different markets impact each other. And what has been really gratifying to see is that even in times when there's a dislocation due to volatility, borrowers still have options in terms of financing, their operations. And that's been something that, it's been really, just an important development for sure. We're going to talk about how the markets impact each other, what the implications are of the growth of different asset classes. We're going to talk about, ESG. We'll have a couple of panels on, liability management. We'll have a covenant panel, as we do every year. And we'll have our keynote speaker, which I'm not sure has been announced yet, but I'm very excited about the keynote speaker, top leading name in ESG. I'll have to come back to you if I can announce who it is. And then we are also going to have a debate on AI and digitalization. So the agenda is going to be outstanding, and we're really looking forward to the event.
Yeah, sounds incredible, and obviously we're looking forward to joining and seeing all of that in motion. Thank you so much again for joining us, Sabrina.
Oh, really has been my pleasure. Thank you, Luigi.
Thank you to Luigi and Sabrina for a very interesting discussion. This concludes our episode. Please email esg@kbra.com with any questions or comments. We also encourage you to visit KBRA's ESG website at esg.kbra.com, where you can find ESG research related to the topics discussed in this episode, further details on KBRA's ESG approach, and other ESG-related media items. You can also join our mailing list to access our ESG Weekly Roundup newsletter.